everyone. Welcome to another edition of the Qorent-Xperts podcast. My name is Tolulope Oga, and I'm super delighted to have you on this edition of the podcast. As you already know, Qorent-Xperts is positioned to deliver loads of value. On this episode of the podcast will not be any different. Today we're going to be considering an interesting topic. We're basically going to be unpacking the value in digital loan origination. And with me today, I have the amazing Chidinma Jane-Ezike. And Chidinma is a manager here at Qore. She's the manager of the lending automation business. And we're going to be discussing this insightful topic. I'm going to read Chidinma's bio shortly, but first, as we do it, I want you to give a rousing applause for the amazing Chidinma. Hi Chidinma.
Hi Tolu.
Thank you so much for agreeing to do this. I'm super delighted to have you on the podcast.
Thank you.
And so we're going to be discussing loan origination.
Yeah.
And I know that you're a subject matter specialist in this. I'm going to read your bio shortly so that they will know. So basically, I trust that you are ready to deliver loads of value to us.
Yes, I am.
Awesome. So let me read Chidinma's bio. Chidinma Jane-Ezike is a seasoned financial services professional and the manager of the lending automation business here at Qore. With over a decade of experience in commercial and personal banking, she has made significant contributions to the Nigerian financial sector. Known for her strategic leadership and insights, Chidinma has spearheaded initiatives that drive financial inclusion and digital transformation in the industry. She's also an advocate for innovation in fintech, helping to reshape the landscape of the financial services industry in emerging markets. Everyone, welcome with me, the amazing Chidinma.
Thank you, Tolu.
Awesome. So let's just get right into it. Awesome. So Chidinma, what exactly is digital loan origination and how does it differ from traditional loan processing?
All right. Digital loan origination is actually the automated process of applying for a loan, appraising the loan process, approving that loan and then disbursing that loan. But instead of via the branch, now it's going to be through the digital platforms. Okay. This actually leverages technology to streamline and then optimize the entire loan life cycle from the moment the customer makes that application to their credit assessment and risk and eligibility determination to approving that loan, of course, and then disbursing that loan through digital channels. Now, there are key features that a digital loan origination would have. First and foremost is that one, it has a faster processing timeline. Okay. Secondly, there's automated credit assessment. Everything is automated. Thirdly, the customers would have access to self-service capabilities, instant disbursements, and of course, online application as against walking into the branch to request for the loan. Now, the difference between the digital loan origination and traditional loan processing, first and foremost, is one, traditional loan processing has a lot of manual paperwork, in-person meetings, longer approval times. So it takes a longer time to actually process an application in the traditional loan processing method as against making it online. Then secondly, the application process caters to mostly working customers, which means the institution has to have many branches in different locations to be able to cater for these customers. Then thirdly is the fact that absence of credit decisioning tools leads to biased, subjective, inconsistent credit analysis. So, for example, I take my application to branch A because my friend works in that branch. I might get a better result. I take it to branch B where I don't know any person, and then they are judging based on what my transaction history is like. So you just have a lot of different credit analysis because of that. Now, for customer experience, your customers would have to have interactions with just multiple bank staff, and it's limited to working hours. So you have to come between 9 to 5 or 8 to 5 or whenever we close work these days. So it's limited to that. Once work has closed, you cannot access any loans. You cannot even apply for it. Weekends, you cannot apply for it as well. And basically, those are the differences between the digital loan origination and traditional. While the loan origination enhances convenience and then literally speeds up the entire process of the application, the traditional loan processing involves manual work. And then whenever you get it, you get it.
Exactly. So, this just came to mind even by reason of our discussion. I just noticed that over time these days we have like an advent of different loan service providers, and like there's just an outflow of them everywhere, literally. Is there anything that sort of like you say is a contributing trigger to that, just generally?
Okay, so generally, you look at Nigeria as a whole, the country is not lacking for people. So you have over 200 million people, which means for industries, there are over 200 million people for me to sell my services to. So with fintechs, okay, as against the traditional brick and mortar style of giving out or doing business or giving out financial services, with the digital loan origination, you're able to reach more customers, you're able to access more customers. And then financial inclusion is also a thing, because what happens with the brick and mortar is you're only able to serve customers within your location. Whereas with the fintechs, I mean, I can be in Lagos and have customers in Damaturu, I can be in Lagos and have customers in Jigawa with just one branch. So it's seen as innovative and serves as a competitive advantage, because if not, if we have to keep going back to the brick and mortar, it means all of us will be struggling. Just imagine all the banks on Admiralty Way, for example, struggling for just the same customers in Admiralty. Meanwhile, there are loads more customers in other locations that you can actually access.
True. Awesome. I told you guys that Chidinma came here loaded for us. Okay, awesome. So, what would you say are the key benefits of implementing digital loan origination for financial institutions?
There are a lot. Let's start off with efficiency and speed. Okay, the fact that a customer can actually apply for a loan and then get it disbursed in minutes, for example, as against having to get your staff, maybe somebody is ill and not available, and then it just keeps increasing. Digital loan origination gives you access to efficiency and speed. Secondly is the fact that you have enhanced customer experience. I mean, I don't have to go to the branch and start filling long forms just to request for a loan. I can sit in the comfort of my home and just, upload, just request for the loan, whether via the mobile app or your website or the USSD. Then you also have cost reduction. We might not know how much digitization reduces cost until you have to buy paper, until you have to pay for labor, until administrative expenses that come with having to process a facility, and then fraud control. Okay, I mean, with manual, there's no audit trail. Nobody is checking anything. People just come. Oh, this is it. You can connive with anybody and then just disburse the loan and take it out. But digitization helps you manage that, because we now have workflows that this application has to go through. And then it also helps with compliance with regulatory requirements, scalability, as against, this is the branch we have and these are the staff we have with to process a facility. So just imagine you come in one day, okay, you have 2 staff in your credit team, and then there are 1,000 loan requests. Just however it happens, you just have 1,000 loan requests. It's difficult for you to be able to process that using just 2 people, as against when a system is doing that for you. Then it is just innovative. And as you mentioned, it just gives you access to competitive advantage. In this particular market, in this financial industry market, you need to digitize to be able to work, you need to digitize to be for work, basically, not even anything. You need to actually digitize to be able to succeed in this market as of today.
Awesome. Thank you so much for that. So, I'm going to ask you this next question. So, in terms of what we do at Recover, so take for example, I just come up today. I have capital that I want. Okay, I want to go into the lending business.
Yeah.
So how would you say that Recover is positioned to help lenders like me to be able to go digital?
Okay, so what we've done with Recover is to actually build a solution that has automated the entire process. So remember when I said digital loan origination has to start up with even when the customer makes the application, how is the customer able to make these applications, to appraising that loan application, to the approvals, and then loan disbursement. So what we've done with Recover is to entirely automate that process. So again, we've gone further. What type of loans do you want to disburse? Okay, I mean, there are loans that you want proper appraisals to be done on. There are loans that you don't need, your micro and nano loans that you want. I mean, somebody comes to request for a 2,000 naira loan. Why do you want to spend 24 hours to disburse that kind of loan? So we built a solution that is tailored basically for those kind of loans, the micro and the nano kind of loans. And then secondly, we also built a solution that is tailored to digital workflows. So the loans that you want appraisals to be done on, that will go through the entire from your underwriting processes to financial statement analysis to your credit history report analysis down to disbursement. So for workflows, loans that you want proper appraisals to be done on, we also built a solution for that. And of course, I would always say that loan application doesn't just end with disbursement. It goes as far as collections and recovery. I mean, we're not running a charity, so if I'm giving out money, I expect that my money is going to come back. It's a business, okay? Principal plus income. So after the disbursement, Recover also gives you a solution that would aid with collections and then recovery of those funds in the event of default. So with Recover, I would say once the institution signs up, you are ready to lend. Whatever products you want to create, whatever market you want to go into, Recover would streamline and optimize that process.
Awesome. So I hear what you say about Recover. So I want to particularly speak to the collections and recovery aspect because, like you said, it's not a charity. We're going into it to get interest on whatever it is we lend people out there. As a business owner, I want to make my money back. I'm not just a good Samaritan who wants to borrow people money in a tough economy. How does Recover help me? What guardrails does Recover put in place to be able to help me get my money back?
Okay, I'm going to put this in layman terms so everyone understands. So of course, one of the risk assessment criteria I would advise financial institutions to put in place is for customers to provide a repayment account. It's difficult to see customers that have loan accounts. I mean, customer would have had accounts. It's difficult, it's rare, not difficult. It's rare to see customers with just one account. But again, if you're going to give loans out to customers, I expect these are the basic things I expect for you to receive from the customer. First is a primary repayment account. If you're a salary earner, I expect that you would give me the account where your salary is domiciled. If you're a business owner, I expect that you give me the account where you pass your business proceeds through. Now, in processing a loan application for any of these customers, this primary repayment account is obtained from them. So again, putting it in layman terms. So say I come to Tolu MLB today to request for a loan. Okay, I do not have any existing loans prior to now with Tolu. So maybe just their website, or I'm going through their mobile app, or USSD. it could be via any of these touch points. So I come today and I'm requesting for a loan from Tolu MFB, and I have given my primary repayment account. This is where my salary is domiciled. So Tolu MFB debits this account for the repayment of my loan with you. Okay, now that is where Recover comes in, because most institutions cannot debit other bank accounts. That is where Recover comes in. Now, on behalf of Tolu MFB, Recover is going to debit the primary repayment account on the due repayment date on behalf of your institution. So it debits and it credits the institution's position. Now, that's simply collection. So if that account is funded throughout the tenure of that facility, Recover will just debit and credit the institution's position. Now, if the account is now not funded, there are two things that can happen. It can be a case of partial funding, or it can be a case where the account is not even funded at all. So say, for example, a customer is supposed to pay back 20,000 naira every month. Say it's a 6-month tenured loan, okay? And customer is supposed to pay back 20,000 naira. Now, Recover goes to the account that customer has provided, and instead of 20,000, the balance on that account is 10,000 naira or 5,000 naira, and in most cases 1,000 naira. Now, that's the partial funding. So in as much as the customer is owing, the degree to which the customer is owing is quite reduced for a customer that has a zero balance or 14 kobo as balance, you get. So now, in both cases where the account is partially funded or the account is not funded at all, what Recover now does in this instance is, after the trigger period, within that period, we hope that the customer would fund their account for the repayment of that loan. Now, after this period has been exhausted and the account is still not funded, Recover then identifies the accounts that are linked to the borrower's PVN to debit for the repayment of that loan. Now, as long as there are funds within that customer's financial ecosystem, it could be with commercial banks, it could be with finance houses, it could be with microfinance banks, Recover will just identify the PVN linked accounts of the borrower and then debit for the repayment of that loan.
Awesome. That gives quite a lot of reassurance
yes.
to look MFB. Awesome. So now we've gone on and on about how digital loan origination, or just lending automation, how it is the way to go.
Yes.
So what are the challenges that you have seen from experience? And okay, I'm a financial institution, you sold this to me. What are the challenges that you've noticed in onboarding financial institution? What are the challenges they faced in transitioning from traditional to digital automation and lending?
Okay, so first will be the customer themselves, customer adoption and trust. Okay, if you have an institution where the demography of your customer has to do with customers that are less tech savvy, or they are older, the older generation, you might have a problem with customers adopting the your digitized process now. So that is a challenge, and I would say my recommendation would be to mitigate this challenge. You will need to make use of your staff to educate customers on how to actually use this process. Now imagine a customer that had to travel all the way to come to the branch to request for a loan, and then you download the mobile app and then actually show him, this is what you do. Next time you want to request for a loan, just come here. Just imagine, the joy and the fulfillment that comes to the customer. So for that, yes, it's going to happen. If you have customers who are less tech savvy, adoption of digitization is going to will face some sort of resistance. And then secondly is the change management. Apart from customers, your internal staff as well. So when you have staff that are already used to doing things the manual way, you're going to also face resistance with getting your staff now to actually change, and start, just going to check the system, customers that are used to, sign for me and bring back, you're going to actually face resistance with this. With this, I would encourage to mitigate this, maybe encourage the leadership, to have communication about the benefits of digitization, how it's going to save you work. I mean, work-life balance. On the last day of the month, you're not going to stay in the office till 12 p.m. trying to make sure that you reconcile them. So communication around it. Maybe get a champion, for digitization, incentivize it if you have to. Just anything to make staff kind of adopt that process. Then thirdly is the fact that most institutions might also have legacy systems. And then when I mean legacy systems, I mean old systems that are not the digital platforms that we're using. So you can we have institutions that have been here for 10, 15, 20 years. They've been doing business for that length of time. It's difficult to transition them from those old and legacy systems existing to these new digital platforms. Cloud infrastructure is in place now, even as much as it's new and most institutions haven't adopted it. That would be my advice. Institutions need to adopt this cloud infrastructure. It's easy for you to integrate and it's less cost as well. And then finally is the knowledge gap. Now, there's a problem within the financial industry. There is high staff attrition rate. The churn rate is quite high when it comes to employers. So you get this technology today and then you train your staff, and then 1 year, 2 years, 3 years down the line, the staff that you trained to use this technology that you got to have all resigned. So you have a technology that nobody knows how to use. That is actually a problem. Now, to mitigate this, there has to be frequent periodic trainings of your staff. Everybody needs to know how to use the tech, because it's a problem where you have a tech that is supposed to make your life easier, but nobody knows how to use it. It is a problem. So I would advise that institutions get to have periodic trainings of all their staff members, just so that gap is not there.
Oh, awesome. Thank you so much, Chidinma. Yeah. So this has been an interesting conversation. Really. So picturing this, I'm just seeing how the impact of digital automation in the lending ecosystem, how it would have on the credit and financial ecosystem generally in not just Nigeria but in Africa. I mean, outside of the country, it's very easy for them to assess your credit worthiness, and you're able to have access to maybe a credit card that allows you to make purchases based off of your credit worthiness and the like. So just looking at the nearest future, how do you see this products coming up from fintech, and how Recover is also enabling lenders and the like? How do you see this playing out for credit and access to finance generally?
Okay. Most times when I remember that Nigeria has over 200 million people, I'm happy about that prospect. It basically means that an institution can never run out of customers. So you're able to innovate. The products you have today might not suit the customers of tomorrow. So you're able to innovate. When it comes to credit scores and all that, because there are a lot of people, people are coming up with ideas around the kind of loan products to give the customers. How do we innovate it? Do we do sectoral lending? I mean, instead of lending to everybody, do we just pick a sector of the economy and just lend to those kind of people? So that's the beauty of Africa. We are a lot of people, there are a lot of ideas. Fintechs are springing up everywhere. I mean, just the fintech industry in Africa in 2022 raised over $2 billion. That's just to tell you how innovative we are and how creative we are as a people. So I'm not worried about the kind of loan products that are going to come up. I mean, every day things are happening in the economy that is forcing institutions to review these what they have in place. Now, the good thing with digitizing your loan origination is the fact that you have access to data insights. Okay, you're looking at your customers, you're looking at your customer behavior, so you're able to use information from that to streamline your processes as well. What do I do in terms of my scorecard algorithms? How do I tweak the risk assessment criteria on my scorecard? So because of those data insights, I mean, as against using paper, where is the data insight from that? But that is one of the beauty of having digitizing that loan process, so you're able to just make decisions, enhances your decision making based on the insights you're getting from your customers, news from the market. Oh, this is happening. Oh, the guys in the building line in the market are requesting for a loan. You're able to quickly build a loan product that suits that particular sector in the market, So this is based off of data insights that you would get from this. So the future is AI.
Awesome, yeah. Awesome. So we are saying in the nearest future, by reason of artificial intelligence, we're able to glean insights that we can use to create products on the go to suit targeted audience and people, even as the need arises.
Yeah, I mean, even before we get to the point, I mean, Nigeria is literally the fastest growing when it comes to innovation, and then fintech, and Nigeria is really way ahead of most countries. So even before we get to the point where AI becomes is the fact that, I can look at a BI report of the loans I booked last month, and that would help me in making decisions for this month. I can look at the last quarter. I can look at some analytics from the last quarter, the loans we booked in the last quarter, and that would help you in making decisions for the next quarter. So the beauty is AI is going to just streamline that process, make it easy for you to just get feedbacks and go from that.
Awesome. Thank you so much, Chidinma, for your time. This has been an insightful conversation. So before we let you go, tell us something out of the box about yourself. It just feels like this conversation has been also serious, so straight to the point, and very, very business-like. So tell us a fun fact about yourself, even as we wrap up this.
So, fun fact about myself, most people don't know, and most times I even forget that I can actually do it. I can actually draw. Yes.
Whoa.
I can.
We have an artist building.
Most times I forget that I can do it.
Nice.
Yeah, it's basic. I remember doing it one time. I was in a meeting and I was extremely bored. And then I just started drawing, and everybody was like, oh wow. I even didn't remember that I could do it, but I needed to just engage my brain because the emotions were not too long. So most times I forget that I actually can do that.
Oh, wow, that's impressive actually. Thank you so much for joining us on today's episode of the Qorent-Xperts podcast. We trust that you got loads of value, and we look forward to seeing you on another episode of the podcast. Till we come in your way next time, keep being courageous. Bye.